Press conference of Tata Consultancy Services. Thank you so much for joining us this evening. We know you've had a very long day, so here's wishing everyone a very happy new year and hope you and your family are safe wherever you are. The management is here with us, so let's start with NG Subramaniam, COO, CFO Samir Seksaria,
Hello.
and of course Milind Lakkar, the CHRO. So we'll kickstart the press conference with the opening address with Rajesh Gopinathan as usual. Rajesh, the floor is yours now.
Thank you, Kritika. Welcome, everyone, for our earnings release for the quarter ended December 21. We have had a exceptional quarter, growing at 15.4% on constant currency terms to hit a revenue of 4,885 crores in rupee and 6.52 billion in dollar terms. That's a growth of 16.3 in rupee terms and 14.4 in dollar terms. The quarter also was exceptional that in the calendar year 21, we have now hit a $25 billion revenue mark. The most importantly, the growth came with continuingly industry-leading profitability. Our operating margin is at 25%, giving us a total operating profit of 12,237 crores. Similarly, the trend continues on the net profit side with a net profit margin of 20% and an EPS of 26.41 rupees. Our cash conversion continues to be very strong, and cash from operations in this quarter stood at 10,853 crores. And we currently have close to about 65,000 crores cash on the balance sheet. The overall revenue trend was coming from a broad-based growth across markets and segments. Our most important market, North America, which accounts for 50% of revenue, grew at 18% year on year on constant currency terms, hitting a revenue of $3.31 billion in this quarter. Continental Europe continues to be a strong performer, growing at 17.5% year on year, while UK uh, slightly lower than the others, but still a healthy 12.7% and hitting $1 billion each in both UK and Europe. From a vertical industry perspective, again, our largest vertical, BFSI, um, similar to the US commentary that I gave, grew at 17.9% year on year to hit a revenue base of 2.09 billion. Retail and CPG, which includes the travel and hospitality segment inside, bore the brunt of the COVID impact. And very happy to report that on a year on year basis, they have come up with 20.4% growth to hit almost $1 billion in revenue. Underlying even the segment of travel and hospitality, which was particularly badly hit due to the pandemic, has finally hit um, found revenue parity back to its peak revenue. So that's the trend on retail. Manufacturing is another vertical where we are seeing very strong participation across the board. In areas, automotive has been very strong. Overall, the vertical has grown 18.3% year on year, and it has come across geographies, whether it be the North America or Europe and UK in this case also. The segmental performance is also reflected in our customer metrics. The number of customers from whom we make more than $100 million a year grew by 10 on a year on year basis, growing from 48 to 58 customers. Similarly, if you look at the customer metrics down the chain, we have had strong customer additions at all levels of revenue bands. And at the lowest level, which is 1 million plus, our year on year growth has been almost 100, where we have added 98 customers on a full year to full year, last year to this year basis. The quarter also has been a standout quarter from our talent management perspective. Our attrition, though it is inching up, continues to be the best in class by far in the industry. And we have an LTM attrition of 15.3% this year. But despite that attrition, we were able to increase our total associate count by 87,725 on a year-on-year basis, both managing attrition as well as attracting the right talent to power our growth across the board. So, looking back at the quarter, it's been a quarter of, though a seasonally weak quarter, a quarter of significant growth across almost all our key segments, whether it be verticals or markets. And we are seeing participation on all parts of the customers' digital and technology transformation journeys. As you know, we have continued to build out our capabilities across a wide spectrum, whether it be cloud, whether it be digital analytics and other areas, and we see continued strong traction across the board. From a pipeline perspective also, we crossed a TCV of $7.6 billion this quarter, and we saw strong TCV across all segments like North America, BFSI, retail, etc. So overall, net very strong quarter. And with that, I want to turn it back to you, Kritika, and we'll take questions afterwards.
Thank you, Rajesh. So we'll start the question and answer session now. So let's bring in our first question, which is coming in from Sajid Mangal from Bloomberg Quint. Guys, I want to request you to stick to two questions, please. To Sajid, two questions, and you can unmute yourself now.
Good evening, gentlemen. Happy New Year to all of you. To begin with, Rajesh, I just want to get an idea of the growth which you're going to see coming on the back of the $7.6 billion dollar TCV that you have booked in Q3. And is it fair to say that based on the kind of TCV that you've been clocking, you would cross the FY21 TCV of $31 billion, and the revenues which you have grown in Q3, you will end FY22 with a higher teen growth rate going forward. For at least for the FY22, you will grow 18 to 19% year on year. My second question is for Samir, which is on margins. Basically, there's been some pressure on margins, but there is a commentary in your release saying that you're seeing bottoming out of attrition bottoming out, and there could be moderation going forward in that. So will that be able to bring back your margins higher, about 25% in the coming quarter? And final for NGS is on banking and manufacturing has seen growth, but it's muted as compared to retail and communication on a quarter-to-quarter basis. What was the reason for that?
Sajid, thanks, and very happy New Year to you too. The TCV numbers, as we said, is actually same compared to last quarter at 7.6 billion, but a very healthy number when you look at it on a year-on-year basis. And as a trend line, you would have seen a continuously increasing one. But the standout aspect of this quarter, which is again similar to what was there last quarter, is that the TCV is very broad based. It's coming across segments, it is coming across markets, and it is not skewed by any single large deal. So it's a very broad-based growth that we are experiencing, a very broad-based demand environment, and we are participating strongly across the full spectrum of demand. So that gives us quite a lot of confidence in terms of the overall outlook for the future. Beyond that, I wouldn't like to quantify the numbers, but I think the TCV, both what we have had in the past, those are materializing in the revenues that we are seeing now, and the current TCV also positions us strongly as we look forward.
Sure. Thanks, Rajesh. And on the margins, Sajid, to your question, our margins were at 25%, and that's down 60 basis points from the previous quarter, but we still maintain industry-leading margin. And to your question on attrition, so as I have said in my comment, we have done both tactical initiatives or tactical measures during the quarter, as well as long-term measures to tackle the churn or the supply side challenges which the entire industry is seeing. Uh, uh, as I had said last time as well, as far as the churn continues across the industry, we'll do whatever it takes to whatever interventions are required, as well as we'll look at measures. Our priorities would be to capture growth and ensure business continuity for us as well as our customers. So while we also have the lowest attrition, but we'll take all those measures required. And once it normalizes is when we'll look towards optimizing the margins. What do you, NGS?
Thank you. Thank you. And let me at the outset wish all of you a great start to the year. And let's hope that 2022 will be a much better year than the previous two, both in terms of personal as well as professional front. Banking financial services has been our largest vertical, as you know, and it's grown by about 18%, year on year during this quarter. And manufacturing is also done well for us. It's grown by 18.3% year on year. But I take your point that sequentially, there has been a tad lower than normally what you would expect. But as you know, in this particular quarter, these two industries, they are particularly having challenges with respect to furloughs. In banking financial services, we had our challenges of furloughs, which we typically account for, and that is seen in the sequential growth that we are putting in. But having said that, look, we see a phenomenal momentum, and the overall deal value, or at least total contract value signed in banking financial services this quarter, is about $2 billion plus. And manufacturing also, I think slightly a growth was tad because of the furloughs, as well as some shutdowns in factories and things like that due to chip shortages and things like that. But overall, nothing wrong in any of these two verticals, and we should see the growth momentum continuing on these two. Thank you.
Thank you, gentlemen. The next question from Reema Tendulkar from CNBC TV 18. Reema, you can unmute yourself and ask your two questions, please.
Gentlemen, it's great seeing you, and congratulations on a strong quarter. And again, wish you all a very happy new year and a healthy one. Rajesh, the first question is, according to you, what has been the change in the demand environment in the last 3 months, for better or worse? If you could provide some nuance to that. And how do you expect BFSI to perform, US BFSI to perform in light of rising interest rates? NGS, on deal wins, you've given us an absolute number, but could you give us a sense of the mix between smaller deals as well as larger deals? Because we are seeing anecdotal evidence seems to suggest that we are moving towards a greater number of smaller deals. So is there a way you could quantify that? And Milind, just one question. On this very strong hiring number of 28,000 on the back of 20,000 plus that you did in the prior quarter, what is the mix? What percentage of this 28,000 of hiring that you've done were fresher hirings? What is the experience age band? Thank you.
Thanks, Reema. The demand environment over the last few months, I wouldn't say there's much to call out on in terms of change. As you recall, we have always spoken about this medium-term visibility that we have on a very strong demand environment, and the overall technology upgrade cycle that is currently underway. We are seeing a broad basing of that. If you look at it from a vertical to vertical basis, for example, manufacturing and in fact auto, which was one of the more impacted ones in the post-pandemic scenario, is seeing significant amount of investments, both on the EV side with the OEMs as well as into the tier one side. We are seeing direct-to-consumer selling going on. We are seeing movement into subscription-based revenue. We are also seeing significant amount of adaptive supply chain and supply chain resilience being modeled to take care of the chip shortage and prioritization related one. So you're seeing much more broad-based kind of demand across industries. I just gave manufacturing as one example. Same thing holds good for healthcare, for retail, multiple industries. To your specific question on BFSI, I don't think our demand is significantly impacted by the interest rate scenarios. Typically, it's a balance sheet item, and they don't. Most of the technology commitments that banks have far exceed or far are not very volatile to immediate interest environments. We see banking investing into continuing to invest into payment modernization, into customer experience, a lot of focus on digitalization, and those are the themes that have been there for some time, and they are continuing to pick up momentum. And I don't see that significantly changing with the tightening interest environment.
Thanks, Rajesh. Rima, with respect to the mix, about 34,000, associates at entry level, which have come in, and associates basically from the market is based on the demand from each vertical. So you put the math, so significant amount of addition coming in from the campus and the rest coming from the market.
Overall, on the banking financial services side, Rima, I think we have a mix of large and small deals. And, the more importantly, I think at least four deals which are fairly significant deals. And they're all in the areas of the future, which is what is making the whole sector very interesting. And we are participating in, for example, crypto exchanges, crypto clearing settlement, payments modernization, as Rajesh pointed out, carbon credits, marketplaces. They're all things which are of the future, and they're all things which we would like to join. We would like to participate and really leverage our contextual knowledge, market knowledge, and domain knowledge in that particular domain. And from talking to our customers and customer portfolios, their plans for the coming year, for this year, has been quite neat, and we are not seeing any reduction in budgets or anything. On the other hand, they are continue to they would like to invest in typically more digital, more growth and transformation initiatives. And overall, I don't see any slowdown per se, except that it's whatever is seasonal. Yeah.
Thank you. Next question from Anisha Jain from ET Now. Anisha, you can unmute yourself and switch on your video. Yeah, go ahead. Anisha, you're on mute. You'll have to unmute yourself.
Can you hear me now?
Yes, please go ahead.
Hi, good evening, gentlemen. My first question is to Rajesh. You did talk about medium term. In calendar year 21, you achieved a revenue of $25 billion, and we are at the cusp of multi-year upcycle. So if you continue the 15% growth rate for the next 5 years, can we see a revenue of around $50 billion mark in a period of 5 years or not? Samir, a question to you on the deal pipeline. You did talk about the segments which are doing well, but is there any mega deal which is there on the horizon? And as far as the pricing is concerned, have you been able to negotiate better prices with the clients? And lastly, NGS to you, India growth has moderated a tad bit this quarter at 15% versus 20% last year. Going forward, do you think there can be any impact of Omicron wave, whether in terms of the talent and employees or in terms of demand on India business?
Thanks, Anisha. 50 billion is definitely a possibility. Whether it happens in 26, 27, or 30, that's the only question. And I think it's too premature for us to be able to take a call on it. But the way we see it is that there is demand out there. And what is required for that is a significant focus on our customers, a significant focus on talent development, and making sure that our partnerships are in place to move the ecosystem and to participate in the ecosystem very positively. We have spoken in the earlier in this call about our focus on talent. We have spoken about our focus on customers. From a partnership perspective, I want to touch upon what we've spoken earlier about cloud and our significant investments that we're making on that area. I'm very happy to say that across all the three major hyperscalers, we have emerged as their partner of choice for all three major platforms. And this similar partnership focus continues across all our key alliance partners. And we believe that working together in this ecosystem, we should be able to get those milestones faster and in a manner that I'm sure even you will meet the expectations that we are setting.
On the deals, as you asked, we have a very healthy share of deals which are in the 50 million to 500 million range, whereas we don't have in this quarter any deal which would be above 500 million. But on large deals, we have a very healthy share of it. The second question was on pricing. We did have a slight realization uptick this quarter itself, and we look forward for further realization improvement over the next future quarters.
Yeah, as far as the India geography is concerned, we had a fantastic quarter in Q3. It really, I think we participated well. Moving forward, it's very hard to say. But then, as we point out, India and some of the regional markets are always volatile. But as you have noticed that we had a great renewal passport program that happened. And in line with the government's Atmanirbhar initiative, we have chosen to be part of some of those big programs, and we are investing in some of those things, taking certain proactive long-term calls to be part of the nation building exercise the government is doing. And hopefully, our efforts in the India geography will play it over the longer time in a much better manner. Thank you.
Thank you. And our next question is from Sankalp from Reuters. Sankalp, you can unmute yourself and switch on your video and ask your question.
Hi, good evening, everyone. I had two questions. One was about how could you call out some sectors that you may potentially be concerned about during the Omicron wave across US and some other geographies? Rajesh, you were saying that travel, etc., was hit last year. Is there a chance that that could happen again? And I also wanted to ask the impact of higher salaries on your margins as you go on to this in this mode of overdrive where you're hiring a lot of people across the board, laterally and freshers. And also, I wanted to ask if you could give a bit of detail about this talent cloud model that you've spoken about previously. How is that helping as the industry reels under the supply crunch? I mean, we're not expecting this to be over anytime soon. So those questions. Thank you.
Yeah, Sankalp, the current wave, its impact on specific industries is difficult to say. As you said, travel could be, but it could very well be a secondary impact. I'm sure you're following the news that a lot of delays and a lot of cancellations are coming through just because of the impact on the crew rather than, so it's a supply side impact rather than a demand side impact. How long that lasts and how that will play out, I think it's too volatile an environment for us to speculate on. And the more important thing is that even without significant amount of international business travel coming back, the travel industry has managed to find its footing, as it were. And when you think about it from, or when I talk about it from a TCS perspective, we have broad-based our presence in that segment beyond airlines and hospitality into logistics, shipping, and other areas, postal services, railroads, and significantly broad-based so that we're able to backfill that revenue. If I were to take just the airline segment, that is still way below its peaks, pre-pandemic peaks. But the overall TTH revenue has managed to come back to where we started declining. So that's the take in terms of specific once impacted. The point that you raise about salaries, um, yes, it could have a short-term impact on margins, but we believe that investing in talent is the right thing to do, both from our own perspective as well as the role that we play with customers. So, tactically and in the short term, those impacts will have to be dealt with. But in the medium term and the long term, it will be net positive to us, both on the revenue side as well as on the overall margin side, because we are hiring the people that we want to hire and significantly investing in retraining them so that we have the right talent which is deeply integrated with the overall TCS ecosystem. So that's the one, but I want to hand it over to Milan to answer your question about the talent cloud.
Yeah, thanks, Rajesh. I think Talent Cloud is definitely helping, be it in terms of enhancing customer satisfaction or be it in terms of increasing our revenues. Being able to put an expert and from any location, that is a lot more acceptable to our customers now and to our own managers now than ever before. And that has caused a significant creation of strategic value for our customers and for the organization both. So being able to work in New York for a customer in Chicago, or being able to work in Pune, where customer is not anymore looking for somebody to come in, and being able to pay the premium because based on the skills, and not based on the location, is the way it is going, and it will go that way. So Talent Cloud is definitely helping a lot, and it's good. It is the future for all of us.
Thank you. Next question from Chandra Shrikant from Money Control. Chandra, you can unmute yourself.
Yeah, hi. Thanks for that, Kritika. Happy New Year to all of you. Rajesh, just want to understand the overall deal environment because, while some analysts say that deals are getting smaller, we are still seeing some large deals. But overall, can you break it down for us? Are there still mega deals, large deals, smaller deals? Which segment will TCS go after? A question for Samir in terms of the pricing. Analysts say that there is possibility of price hikes of up to 5 to 7% for some of these new age transformational kind of projects, hot skills. So are you able to get that pricing gain, and will it help offset the loss that you're seeing because the cost that you're seeing because of your talent costs going up? NGS, in terms of the return to work plan, Wipro just a couple of us announced that they're going to close offices worldwide for the next 4 weeks. Do you see a need for measures like that, or will your current hybrid model work? And finally, Milind, congratulations on the 2 lakh milestone as far as women employees are concerned. I wanted to ask you about the overall headcount number. H1, I think you hired 43,000. H2 was supposed to be 34,000. We've already met that target. So can you give us a sense of how much you will be adding in Q4 alone? Thank you.
Uh, Yeah, Chandra, I think your first question, which was the one, was on the pipeline. So overall, we don't have a specific preference of for small deal, medium deal, or large deal. We participate across the board, as you have seen us, and we stay continuously engaged across the full spectrum. The very large deals, the 500 million, $1 billion kind of a deals, they by nature are few and far between. More importantly, they take a long time to mature, and they are unpredictable in terms of when they will close. There are a few in the pipeline, but we can't take a call as to when that will come through. The more the here and now ones are the medium sized ones, and the relatively large but not the kind of size that you're talking about. And those are what constitute the majority of our current pipeline, and will continue to be the bedrock of our overall TCV, with the one-off mega deals coming in and spiking it uh, uh, occasionally. So, the basic idea being that we don't have a preference of one versus the other, and the current TCV is composed of uh, the relatively large and medium-sized deals, though the pipeline has an equal representation compared to our historical trends.
Yeah,
Yeah,
I think.
Chandra, to your question on. Go ahead,
Go ahead.
Rajesh.
Go ahead, Samir, please.
Sure. Yeah. Chandra, to your question on pricing, our pricing has been stable with an upward bias. And if you look at from a customer perspective, the relationships which we have with our customers are long term. So we don't look forward for short term variations to be discussed with the customer. Having said that, if you look at our business, our traditional services are differently priced, whereas the new age services have more pricing resilience. And with that is what I said to a previous question, that we'll look forward towards improving our realizations even further. So we had a uptick in realization this quarter, and we'll look forward towards improving our realizations in the future quarters as well.
Your question on work from home, work from office. We ran one of the extraordinary vaccination programs for our employees and their dependents. And more than 90% of our employees and dependents are vaccinated. And we are staying focused on improving our secured borderless workspace model and architecture, as well as our 25 by 25 model. We are staying committed to that. Some of our leadership team, when I think the next level of leadership team have started to attend office, and we have given them the flexibility to decide when they would like to be in the office, when they choose to work from their home. But the intent is to really see how they would like to operationalize the 25 by 25 operating model, always prioritizing employee safety. I think the business continuity plans and the 25 by 25 operating model, these two will be rolled out or will be defined at pretty much at a client level and a project level, and then that will constitute how people will come and return to office, from where they will work, how they will work, all of that. So we are staying committed to our 25 by 25 working model.
Thanks, NGS. Chandra, we are very happy that we have crossed that 200,000 women in the workforce milestone. It's a proud moment for us, for all of us. Thank you. With respect to your question on the trainees coming in, so we like you said, we hired 43,000 in H1. I said in the last quarter that we will hire 34,000 in H2. We ended up hiring 34,000 in this quarter itself. What I can say is our intensity will continue. I don't have the number to give it to you for Q4, but our intensity of hiring will continue.
Thank you, gentlemen. And the next question from Shivani Shinde from Business Standard, who is joining us on audio. Shivani, you can unmute yourself.
Hi, good evening, gentlemen. Congratulations and a happy new year. Rajesh, and this question is for Rajesh and NGS both. Revenue beat $25 billion for calendar year 21. The size of the company is becoming bigger and bigger almost every quarter. Does the size then become the reason why the higher double-digit growth kind of gets skewed? Despite all these great numbers, at the end of the day, we will be saying that, okay, this is what the revenue number was. So does the size somewhere brings that down, the impact of growth, and, hence the higher double-digit growth numbers start looking smaller and smaller? That's for both Rajesh and NGS. NGS, to you on passport deal, congratulations. That's the second phase also. TCS has got it. You did say that you are taking some long-term calls for the Indian market. Could you elaborate a little bit more on that? Milind, on the numbers, a great set of numbers, the way you are hiring. Could you just throw some more color on the compensations that the company would have given for this quarter, if you could elaborate more on that? Yeah, that's it.
Very happy new year to you too, Shivani. You could see the logic that you're putting was equally applicable when we were a $10 billion company or a $5 billion company. So the size looks large from our historical perspective, not necessarily from where the opportunity size is. So I believe that our expectation of growth and our expectation of sustained growth should be benchmarked to where we think the overall opportunity size is. And when we look at the market out there and the opportunity, I believe that there is no reason why we should not aspire to continue to grow. Whether that growth will be 15%, it will be 20% or 10%, that will vary period to period. But the larger point being that there is significant headroom available for growth, and that is what we are, setting up the company for, both from a talent perspective, from a customer perspective, investments, and our overall philosophy. So that's the perspective. I think we need to stay disciplined, we need to stay focused. But this is the industry to be, and this is the time to be in this industry. And the market is out there. It's up to us to capture it. Over to you,
Yeah.
NGS.
Yeah. No, thanks, Rajesh. And I think, we don't want to be asked, can this elephant dance again? I mean, I think that we are extremely focused on, and our organization model has always been ahead of time, right? To make sure that we are agile, we are nimble, and we have a empowered and decentralized organization structure by which the company is really can be looked upon as several small companies, and each one hold themselves accountable, do the right investments, and create the right knowledge base and assets, and grow the business. Right. I will leave it at that. As far as India is concerned, there are, we believe that India will be a platform-driven market, right? There are, see, if you really look at the consumer as well as the institutions or corporates, everybody is used to a platform. Everybody is going after digital in a big way, or consumer of digital platforms in a big way, right? Be it insurance, be it banking, be it manufacturing, or and thanks to the India digital stack, and many of these things are happening. And so our view is that we need to be part of each one of these platforms, position ourselves with the right set of apps, right set of platforms that can integrate very well with the India digital stack, and provide each one of our customers, whether it is government or the industry or even the consumer for that matter, to be able to do what they want to do pretty much invisibly and seamlessly. And I think in that context that we are investing in platforms, investing in banking side of it. We are investing in a suite of APIs and microservices that can be connected from practically anywhere to anywhere within the India digital stack. So there are many such initiatives that we are doing, but it will be a platform-driven market, and it will evolve as we see it. And we are well positioned to participate in that particular segment. And trust that gives you an answer.
Yeah, Shivani, with respect to the compensation question you asked, I would say actually responded this way. Our progressive people policies, our policies such as career link to learning, fast track careers linked to learning, is what excites people, and what keeps them going. Their ability to really, significantly increase their compensation by going through the paths which we are defining it for them is what keeps the organization excited day in and day out for us. And that is what I would say. In addition to that, if I had to give some quantification on numbers, we have promoted 110,000 people this year, and we are going to promote another 40,000 people in this quarter. So all of these things together, getting people to to those levels where they feel they deserve, where they need to be, recognizing them through a proper objective process, and ensuring that they are learning and they are creating value for themselves in the process is what we believe in, and we have been doing, and it is working for us, and we'll continue to improve upon it as we go along.
Thank you. Next question from Ramita Majumdar from Economic Times, who's on audio as well. Ramita?
Good evening, gentlemen, and congratulations on the numbers. For Rajesh, I would like to understand if we are seeing this long-term shift to more of mid-sized deals. Does that mean that the pool of competitors for such deals has also increased with more maybe mid-caps and small cap and smaller companies basically vying for the same set of deals? Of course, differentiation is always there, but for the clients, is it a larger set of competitors to deal with? And also, can you please share your renewals number over here? And for NGS, if you could give us some color on the kind of performance from platforms business, as well as the kind of incremental revenue that it is adding to segments like BFSI and retail. That's all. Thank you.
Amit, I did not say that there is a shift to smaller size deals. What I said is that when you look at it from our pipeline perspective, the distribution of the pipeline in terms of mega deals, large deals, and mid-sized deals continues to be similar to what it has been in the past. Just that in the nature of the mega deal, they close. They're a fairly long cycle kind of deals, and they don't close with the same what should I say cadence that relatively smaller deals close it. So our current quarter TCV does not have any single very large deal in there, but the pipeline continues to be well distributed across all deal sizes. So there is no structural shift in the market towards either large or towards small. NGS?
Yeah. Overall, Ramita, products and platforms did well this quarter. TCS Banks continued to win new clients and had a great quarter in terms of getting into some of the new areas that we wanted to get into. And we also completed one of the big mergers in Saudi Arabia between, for example, the Saudi National Bank, right? The whole merger between Samba and the National Commercial Bank, as it originally used to be called, that merger program got completed in a record time of 9 months, and it's been a great success there. Ignio, for example, did extremely well this quarter. Again, won a significant number of customers. Our OmniStore e-commerce platform, again, that did quite well. And above all, the Mastercraft has won 24 new wins in this quarter, and it's quickly evolving itself into a great low-code, no-code platforms, right? So overall, we had a very good quarter in terms of all our products and platforms, not to mention about TCS Hubs and things like that. Regarding the incremental revenue on how these platforms contributed, I have not done that analysis. I have not tracked it, but I will do that and I'll get back to you. Thank you.
Next question from Sarita Roy from Bloomberg. Sarita Roy, pardon me, from Bloomberg. Again requesting everyone to stick to 2 minutes. Very tight on time.
Thank you, Kritika. Hello, gentlemen. I wanted to ask you about two things particularly. One is, the beginning of the year conversations that you have with clients across verticals and across geographies. What are you reading from those conversations for this calendar year in terms of, IT budgets? That's the first question, both for Rajesh and NGS. And then the second question is that, all of the talent challenges such as training, hiring, reskilling, pay raises, how are you going to factor that into the pricing? Is that going to come into play? Has it already come into play as you price deals? I was very curious about that. And congratulations on hitting the 36 and 44% women in the workforce milestone. There are 4 childs in front of me. Very soon, I hope there is a 5th or even one of the 4 is populated by a woman. So I look forward to that day. Thank you so much.
Thank you, Sarita. Your first question was what was your first question?
My first question was about client conversations across verticals and
Client
geographies.
conversations. Right.
Yes.
Yeah. So we'll give you a commentary based on end of last year kind of commentary. We conducted a series of customer events and reach outs before the current set of pandemic related close downs. And overall, across all, and I wouldn't even say almost, across all sectors, customers were very positive about the long-term visibility or the medium-term visibility of their technology investment agenda. And their business transformation anyway continues at pace, and we see that across industries. So when we look forward into the next calendar year, the demand environment continues to be very robust, and I see no reason for any slackening of that demand environment. Yeah. NGS, you want
If I can add there, Rita, I think when there was a window of opportunity, we chose to fly and we chose to meet with customers. I think Rajesh spent nearly 12 days in US and met with a host of customers last quarter. Overall, we found that there is a general belief that they would like to meet, number one, and their offices are all geared to meet, taking adequate precautions of safety of people and safety of and for example, as long as your test results are good, you are allowed entry into the beyond the reception. And once you are inside, I found that there is actually people are comfortable, meeting and talking, right? So I think the hybrid model is something that will stay, and there's a greater realization that they will all work in hybrid environment. They will increasingly lay emphasis on person-to-person meetings for very premium time or premium issues. I'll put it this way, right? It's not that they will meet in person for anything and everything. Overall, they all believe that they will have to coexist with this environment for a foreseeable future, and they look at this as business as usual, and accordingly, they are drafting their own business plans, their own growth, their own safety measures, resilience measures, and so on, right? And profusely, everybody was thanking the work that TCS has done and our employees have done in the last 12 to 18 months. And some of them, when say, look how seamless it had been, for their growth programs, for their efficiency programs, resilience programs, and so on, so on. As far as the people hiring talent, etc., I think fairly, it is business as usual for us. The only thing is that holding ourselves accountable for the skills that we need has been the hallmark of TCS, right? I think we have continued to invest in people. Organically, we have hired them, we have groomed them, we have trained them, we have given them opportunities to grow their skill sets, motivated them, inspired them, nudged them in terms of building the right skills that they all need and to be relevant to our customer base. I think that has been the hallmark of TCS, and we have continued to do that. And there are, in terms of pricing, yes, certain skills, certain type of projects, certain speed to market, speed to value type of projects demand a certain level of pricing. But at the same time, we are very conscious of our long-term relationships with customers, the current situation in which they are in, and the value 360-degree basis is more important for us, and that determines the price that we charge and the price that they pay.
Thank you. Next question, Joshelle Mendonca from ET Prime, who's joining us on audio. Joshelle?
Hello, sirs. Good evening and congratulations on the results. I have two quick questions. One is on the statement that TCS made that attrition may be bottoming out. So I was wondering if you could give me any color on what is driving this statement. Are resignations trending down? Any color that's giving you this confidence? And the second question is a follow-up to NGS, sir, to Shivani's question. You said that TCS was investing in platforms for the government, for corporates and consumers. So is that just ION, or could you give some color on the platforms that you're investing in on the consumer side?
Yeah, Rochelle, Milind here. I think when we said bottoming out, we actually meant the churn will come down in this quarter. In Q4, the churn will come down. The way we measure arithmetically measure LTM may still go up, but the churn for the current quarter will come down. That is a clarification I want to give it to everyone. And we believe that it is flattening. It is not. I will not say bottoming out. It is flattening, and the churn will flatten. May reduce a bit of churn. LTM may still continue to go up a bit.
Yeah, I think, on the India side platform aspect, I think what I mentioned is that everything that we do for our customers in India specifically, it's more and more shifting towards a consumption-driven market, and people are very comfortable using a platform, comfortable with using, let's say, a mobile phone to do many of the things that they want to do. In that context, every platform that is out there, whether belongs to us, it belongs to somebody else, we need to find mechanisms by which we hook ourselves into this, and that's exactly what we are doing. But in the interest of time, and if it's of interest to you, we can have an offline conversation separately. But I will leave it at that at this point in time.
Thanks, Arita and Joshel, for sticking to 2 questions. Harshada Sawant next from CNBC Awaz. Harshada, unmute yourself. Harshada, I think you haven't unmuted yet. We can't hear you. Can you try unmuting and unmuting again? Okay, so let me just get back to Kushal, who's next, and we'll try to see if we can get back to Harshada. So Kushal Gupta, Z Business was our last question. Kushal, you can unmute yourself and ask your question.
Yes. Good evening, gentlemen. My question to you, Rajesh, would be particularly on the growth aspect, as in going forward for the next like particularly FY23, how the growth trajectory would be going ahead, because we are seeing like the kind of revenue which the company has showed over time. So that has been brilliant. So going forward, what would be that? And secondly, would be on the margin front. So margin per se, going forward, would it be stable right now at the current juncture which it is right now? Or it would go down to some extent, because one is the attrition and the second is probably the travel cost going high. Thank you.
Thank you, Kushal. From a revenue growth perspective, as I said, the demand environment continues to be strong and the opportunity headroom is quite high. So it will definitely be our endeavor to maintain the growth momentum that we are currently enjoying. Specifically, what that will imply in terms of numbers, we won't comment on, but definitely we'll be going all out to try and maintain the momentum. On the margin side, similarly, this kind of a very strong demand environment should be overall conducive to margins. Tactically, there might be some amount of volatility given the overall market environment that we are seeing. But we are confident that a combination of what we see on the demand side and the investments that we're making on the supply side, where we are significantly investing in reskilling and bringing on our own talent and making our growth self-sustainable, that would be very supportive to the overall margin scenario. So we should see good growth with stable margins.
Okay, we're very tight on time. Harshada, if you're back, one quick question, please. Okay, no problem. We'll take that offline, Harshada. So thank you so much, everyone, for joining us in this press conference. Hope you have a lovely evening and you're safe. And sometime this year, we get to meet in person and host you here. Thanks a lot. Goodbye.